Alright, hi guys, this is RFX. Just a quick one. Today, is Monday, the 7th April 2025. So, I'm going to be making a quick analysis on some few currency pairs. So, and I'll be telling you how to make very good and precise analysis while keeping it very, very simple and easy. So the analysis is just going to follow a few simple steps. So now, before I go further, I would like to give you some tips. So whenever you want to analyze the market, the first thing, you open your chart. Once you open your chart, it is very, very important if you are as a day trader or as a scalp trader, or if you are a swing trader, it is very, very important that you start from the daily time frame. So starting from the daily time frame, what do you do? Now let's start with Australian dollar, Australian US dollar. So now starting off from the daily time frame, what does it do? What does it help you to do? The daily time frame helps give you a focus. It gives you a sense of direction of where the market is heading to. So, and what to look out for that particular day. So, be you a swing trader, day trader, scalper, it is very, very important. And how do you go about it? You start by identifying the previous highs and the previous low, the highest and the lowest point that was formed on the daily time frame. Now let's identify the day, the high. This is the highest point on daily, the recent highest point on daily. And let's also identify the low. This is the lowest point that price has reached on the daily time frame based on this particular active chart. Now that's all you just need to do. Now by identifying what then the next thing you do is you identify the trend. Looking at this chart, what is the overall trend? What is the current market trend? Now the daily is showing an overall downtrend. However, for this particular current day, we are having market moving in the upside direction, which is showing a bullish indication. However, the overall trend of this particular chart is downtrend. Now that's all you need to do on the daily time frame. Now what are you looking at for today? The next thing you do is move down to 4 hours time frame. Now if you take a look at the 4 hour time frame, you can see that we also have the highest point that was formed and the lowest price that was formed on the daily also aligns with that of the 4 hours. Yeah, so the next thing you do on the 4 hours, you identify the point of supply and demand, areas. So on the 4 hours time frame, we have our support, our demand zone to be around this point. We can see a long whip. So this is our solid what's it called, demand zone here, followed by an FVG, that's an imbalance. Yep, and leading to what? A break of structure. Now let's identify these three key point areas on this particular chart. So I will start by identifying my demand zone. Here I have my demand zone. So here I have my demand zone, right? Now after this demand zone, I follow it was, and the next is I'll identify my support level, which is my supply. So here I have my supply region. This is my supply zone at this point. Now on this particular chart, the trend is a downward trend, right? The trend is a downward trend. Now, and also on 4 hours, I would like to point out some key areas First off, we have an FVG. That's an imbalance at this point here. We have an imbalance at this point here. And now, why do we call this our demand zone? Demand zone. The reason why we call this, oh, sorry, apologies. This is my demand zone and this is my supply zone. Sorry, that was a mistake from me. This is the supply zone and this is the demand zone. Yep. So from this demand zone right here, I have what I call the FVG, which is market created an imbalance which is yet to be mitigated, right? Now, after the imbalance, we can see an impassive move. Market make a very impassive move downwards, leading to what? A break of structure. Now, here is a previous low that we formed, and here is there was a clear breakout. Although there was a liquidity around this area, now leading to a break of structure, or should I say a change in character. So at this point here, I have my change in character. So I'm just going to, let's indicate that. So mark that here. We have what? Our change in character at this point, because this is at this point that the price actually changed, confirmed the change in what? Trend. Now leading to what? A downward movement. So that is all we're going to identify on the 4 hours time frame. Now, what do we look out for? Let's go further down to look at the 1 hour time frame. Now, on the 1 hour time frame, we have our demand supply zone and we have our demand zone right here. So, and looking at the 1 hour chart, we can see that the trend is still what? A downward trend. Now, at this point here, we can see if my price a form of resistance at this particular level here, leading to a breakout, which has not yet been confirmed. Yeah. So I'm just going to draw another line indicates here. So guys, what I'm doing currently is identifying the key areas on the chart. So that will give us a clear understanding and also aid our decision making on this particular chart, whether to buy this particular pair or we're selling it. So currently this is what we have on the 1 hour time frame. On the 1 hour time frame is showing a what? A bullish indication, bullish trend. Now on 4 hours, we note that the market's trend is a downtrend, right? On daily, we also have market to be in a downward trend, overall downward trend, while on 1 hour we are seeing a bullish momentum leading to a break in structure which has not yet been confirmed yet. So now the ideal thing to do is, let's identify the source of that breakout on the 1 hour time frame. Now this breakout occurs from what? An order block. So, and right here we have our order block here. We have an order block, so I'm just going to capture the previous candle too. So we have another block. I would like to change this to green. Yep. So that's on the 1 hour time frame. We have our order block highlighted in green. So the next thing we do is, price has broken, given a change in character, right? So what do we expect next? We're expecting our price to retrace back into this zone, this green zone, right? Giving a reversal indication. Any form of price rejection around this point will give us a confirmation that price is going back to the upside and this is where we'll ideal place to place our entry. At this particular point here, this zone, we place our entry, and because we have a huge demand zone at this particular point region, so our stop loss is going to be a little bit wide. So if I'm taking this trade, it's going to be, let's say I'm placing my stop limit. I'm not placing a stop limit at currently, so I'm just going to highlight the point of entries. So what I like to do is that whenever I have an order block like this, if I'm setting my stop limit, entry limit at, I like going for the 50% entry level, which is at this point. Yep, just at this point. And I will have my stop loss because I have what's it called, a demand zone at this point. This is my demand zone. So my stop loss is always going to be a little bit higher. My stop loss is going to be a little bit wide, just below the what? The supply zone, right? And I'll have my first take profit to be the next supply zone, yeah, because there should be a form of price rejection around this point. So looking at this particular chart and looking at the risk reward ratio, you will see we have we're risking $8 to gain $33. So that's like 1:3 risk reward ratio, 1:3.5 reward ratio. So, and this is an ideal trade. So at this particular point, if there is a form of price rejection, so you can place your entries anywhere within this zone, within the demand zone, however, the stop loss should be at just below 1 or 2 pips, just below. Ideally, I like to make it 2 to 5 pips below the demand zone, because once price, anything that makes price to come here and break below, that means the market has shifted from an uptrend to a downtrend. Yeah, so that is how to make that. Is just, we just make this analysis in 5 simple steps. The first thing we did is that identify the highest points and the lowest price on the daily time frame in order for us to identify the trend. That's one. And then coming on the 4 hours, we also do the same by identifying the demand and supply zones. Demand and supply zones. Then coming down to the 1 hour time frame, we come and identify if there is any change in structure, change in character, or break of structure, of which we have a break of structure from the supply zone, which gives a confirmation that the price has been in a downward movement, and currently price has also formed another change in character up from the demand zone. So we have our confirmation already. All we just need to is to wait for price to reverse back to the order block, and coupled by the, which happens to be within the demand zone. So once price comes back to this particular demand zone, we look for rejection indications, price rejection indications, and then we place our entry targeting the next supply level as our take profit. So this particular trade is a risk reward ratio of 1:3.5. So it's an ideal trade to take. This is USD Australian dollar. This is Australian dollar. So go with me and let's see how the market plays out.